Okay, well, money. We have something quick that we need to discuss in simple terms. We are looking at something that's likely to be growing in simple terms and going well one or the other. And it's about the Feds or the first chair, especially the Kevin Wash himself. Well, he had a meeting, or let's say the second meeting, where he kept rates at around that was around 3.5 to 3.75% in simple terms. And there's something funny, and where he said that households or Americans, one or the other, are too impatient for the last 63 months. That's a long period of time for someone to be impatient with the growing inflation, because ever since we ended the COVID, we have been having a situation where we understand to be saying that inflation is growing, but we are always having those promises that it's going to be going down to the a goal of having it under 2%. And that goal has never been achieved. In fact, the Fed themselves they thought of giving up on that proposal of keeping that inflation around 3%. I believe 1 year ago they had a proposal of saying that we don't want to keep inflation around 3%, and that's something that I would like you to try to understand one or the other. Like, it's kind of funny and bizarre at the same time, because when you try to understand it one or the other, it's kind of a scenario that you have to realign yourself again and think again. I'd be like, okay, if the Fed is giving up at the 2% goal, okay, then what's the future for the inflation one or the other? Are we having an economy that's gonna outgrow the growing inflation, or are we gonna have an economy that's gonna grow that debt? I wanted to think. Every month we have a day where we have a day with the Fed to discuss the rates of inflation, or there is either they are lowering rates or raising rates. We all know the job of the Fed in the first place, well, is to keep inflation low and make sure unemployment is also low, or maybe to keep inflation moderate and make sure unemployment is low. Well, unemployment as of today is around, at least I believe unemployment is around 4.3. Last year it was around 4.2. Right now, right now is 4.2. Last year it was 4.3. Sorry, last month. Sorry, I'm not saying last year. Cut it out. But here's the growing thing that we all need to understand. If the Kevin Watch, the new chair, is trying to indicate us saying that, because if you look at his tone, just look at how he speaks about this.
Hi, Anne Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Anne, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it.
Having right now, or which they are providing to us in one or the other, you're still inflating the economy in one or the other. I don't know how you're going to achieve that 2%. the 2% goal for the US inflation. When you can print money, regardless the type of rates we're having today, we are living a form of an economy that's kind of funny and bizarre in one or the other. Last week, just over last week, we had the bond market raising, and as of today, as I speak, the bond market, the 30-year is above by 5.23%. The 10-year yield today is around 4.7%. The 2-year yield that I say like it's a big tool actually is around 4.28%. The biggest hold of the US debt in simple terms, and that's Japan. Okay, today is discussing ways of returning all its funds at home because the yen is falling fully. Nobody's buying the yen. They're having interest of raising more interest rates for their country so that they make it more attractive for their home consumers, one or the other, or the home buyers of the bonds, so that they're creating a scenario of stopping what I would call their home bond buyers who have been because for the last, I would say for the last 2 decades, Japan have been the backbone of the US bonds, one or the other. Actually, the second, that's after China, because in the last 2 decades, China just lost it before COVID because they were the biggest holders. Right now, it's Japan. We should all try to understand why did China fall out. Be like, okay, I'm backing out. Well, maybe that's after the 2022 war between Ukraine and Russia, the freezing of Russian assets from the Western countries, one or the other. Well, that created like a crazy indicator for the rest of the world, and they be like, okay, we have to back off the US dollar. But after all, Japan is not scared of having frozen assets. One, its currency is falling down. It's like losing momentum fully. It's like blacking out. Japan is trying to find, it's a country with a debt of almost 200% over its GDP. That's crazy high. We should try to understand that Jeremy Powell coming up with such a scenario. I'm building all this just to show you why raising interest rates or lowering them today doesn't make any sense. Doesn't make any gesture that we are having. We have more hopes of having inflation going low. We have the funding that's going to the war. Let's say in the Middle East, we own what's taking place that side. But if the Fed can print money out of the blue to fill up that gap, even if regardless what interest rates we are looking at in the books in one or the other, I don't think it makes sense. You're still inflating the world, and I wonder where you get the data that you're providing to us, to the rest of the public, showing us as the data showing that, okay, this is the rate of inflation. You're keeping, okay, right now you're keeping rates at normal, okay, but you're still printing money. You get the point? Because I believe you can only print money when I would say, you lower interest rates down, but you're keeping them stable, but you're still able and capable and that's a law for you in one or the other. That's where I lose that sense of thinking interest rates make any sense. And Jeremy Powell gaslighting, I would say, Americans one or the other, calling them, I would say, saying that they're impatient for the last 3 months. That's something really, I mean, if let's say, I just give an example, just you proposing to a girlfriend, one or the other, and she tells you have been proposing for the last 63 months, she be like, you're just impatient. What comes into your mind? That's not the big picture. Here's the big picture I see in one or the other. Well, according to his body language and the way he was talking, that shows one or two things. It shows that Jeremy Powell, he's either kind of stuck, because I just want to give you an assurance. One, unemployment is rising. Regardless, yes, they showed last month it fall by 0.1%. Bro, that's a small number. Bro, when you still have a raising debt of over 7 billion per day, that's almost that's around today 39 trillion US dollars. It's heading to 40 in the next 2 weeks. It will be 40, because if every day you're raising 7 billion, today you're around I believe it's around 39.47%. Sorry, 39.47 trillion US dollars of debt of today as we speak. What do you think about it when it's gonna come within the next 2 weeks, it's going to raise more higher. Inflation today, well, the headline inflation is around 3.7%. That's high inflation. The core inflation today is around 3.3%. But what makes this data to be starting having a doubt is the power of the Fed to be able to print money, regardless the rates we have today. It's like me coming up with rates and I say, I'm not saying like I'm doubting the data they are providing, no, but the power for you to be able to print money, regardless the interest rates we're having today, or either those interest rates are either supporting you to print more money or don't print it. You're creating money out what's in here, one or the other. It doesn't matter either we're having quantitative easing or tightening, one or the other. Quantitative easing or tightening, one or the other. It doesn't matter. That what I'm going to implement is one. Jeremy Powell's behavior to the public wasn't unnecessary, calling the public impatient. Bro, these are customers. These are people you're serving, one or the other. But my main view is one. This shows one or the other. We are heading or we are kind of cooked, because today central banks are no longer holding gold. Okay, central banks that used to hold what they call U.S. treasuries or the safe havens. Today they are being under, how should I call them, revised by institutes like Moody, graded down from a triple A to a double A. Very soon it could be a single A when they are no longer safe. I'm not saying it's going to happen today or tomorrow. It takes a while to institutes to come out to emissions, I think. But if you see bonds going high and high, today that 30-year yield is around 5.2, I believe 5.23%. The 10-year yield is around 4.7. It was last week, I believe it went about 5%. It's not looking good. And trust me, whenever you look at the bond market going high, I believe that's the actual economy. It shows how pressurizing or the stretch on the economy that's taking place one or the other. If you're looking at the stock market, I would say you're looking in the wrong place, because the stock market is another scenario. Actually, the stock market shouldn't be used as an indicator for the US economy on one or the other, because it's something that today is trying to stand out one or the other. And actually, since it's just supported by a few companies, you get the point. Back to Jeremy Powell. Jeremy Powell indicated one or two things. This is my conclusion. Jeremy Powell indicated one or two things, that he doesn't need you to force him to ask him for the actual. You don't need to force him to be cutting down the rates. It's in his will and his data, because he never showed any behavior or any move or future move of how he's gonna lower interest rates. He said it like he acted in a weird way. I'm sorry to say, like he acted like you don't need to know what's going on. You don't need to understand what's taking place. Just wait for the surprise. Just wait for the you get the point. That's how it looked like. And that's how I can describe it at the end of the day. Otherwise, thank you for watching. See you in the next one. We pray for a better economy. We pray for things to get better one or the other. Otherwise, it's not looking good. Like and subscribe if you found value in this kind of videos. Yeah, I'll be showing up daily. See you in the next one.